the biggest threat to mining isn't price, isn't politics, or even permits? What if it's deeper than what you physically see? Resilience. Not resilience as a buzzword, resilience as survival. Climate shocks, cyber attacks, supply chain infrastructures, workforce collapse, even political volatility. The energy transition is accelerating faster than infrastructure can handle. Welcome to the Markets and Leaders podcast. I'm Lyndsay Malchuk, your host, and today's episode is not theory, it's reality. And if you're in mining, if you're in energy, capital markets, or resource development, this conversation is not optional. It's required intelligence. This show is where capital meets consequence, leadership gets real, where the conversations don't stay comfortable because, let's be honest, the world really is operating not in that zone. And we're about to uncover something that every mining executive, every investor, every board member, and every operator is being forced to confront, whether they're ready or not. The old playbook, it's broken, and happening right now is a structural shift. And this is why today's guest matters. I'm joined by Raul Munoz, a strong voice for mining and natural resources in North America at Marsh. Raul isn't just studying these risks, he's working inside them, across operations to governments, across issuers to supply chains, and mining leadership teams as well. He's helping organizations navigate climate exposure, cyber threats, workforce risk, and long-term operational resilience. Raul talks about the advantage, a completely different perspective than one would think. Welcome. It's so great to have you here.
Thanks for having me.
Yeah, I have to say it has been a crazy, wild couple weeks here in Vancouver. I don't know about you, but I feel jet-lagged. And I live here in Vancouver.
It's all the travelers that have been here.
That's it. You try and keep up with it all, and at the end, your body's going, are you in an airport? Like, what is happening here? I know, I'm just coming off of that high vibe all 2 weeks. I don't know about you.
Yeah, and it'll continue.
It will continue.
It keeps going, right?
That's the thing. We end one and then boom, off to South Africa.
Off to the next one.
That's right. All right. So, Raul, I'm going to kick things off with something I hear constantly in this industry. And it's about leaders talking about risk as if it's a policy problem and not a design problem. And it's something that really they think about just to ensure or to outsource or transfer or contain, not really something that they architect into the actual business itself. So that to me feels very much like a fundamental mindset block right there. So let's actually start there. Where does that mindset actually break companies?
Good question. And I think maybe we need to break this down into how we operate as humans before we get into a company,
Absolutely.
right? So I live in the world of risk. Whether you're talking about corporate risk, whether you're talking about personal risk, risk is everywhere.
Yeah.
And the interesting way that you phrase that question is how it's now looked at a policy issue and not as structural. Because when you look at risk as something that you have to address, as opposed to something that you have to incorporate into how you operate and what you do, it changes the dynamic, right? It changes how you integrate safeguards, the type of people that you hire for your company, the type of culture, the mindset that you have as an organization, right? And so I think that when we think of risk just in general, people talk about risk, and until you actually break it down and see what does it actually mean, right? What is the purpose? As a company, what is my purpose?
Right.
And what are the risks and the exposures that are going to prevent me from reaching that purpose? And that's what it comes down to.
And that's the thing is that, when they talk about risk, it's more just like the surface sort of level thing. They're not looking at so many other avenues where risk is very, very apparent and growing. Right? So from the outside, a lot of these companies, they look really strong. I mean, they're hitting those costs, they're executing, they're hitting production targets, they're doing all of those things. But strength and resilience are very, very different things, very different. And they show up very different. So let me ask you this. What's the difference between a company that is operationally strong and one that is actually resilient?
Well, you can have both,
Okay.
right? You can have a company that's operating in the most perfect of environments, that it's reaching their targets, that is, constantly growing, that is doing all the right things. I think where it breaks down is the moment you hit a roadblock. And we were talking about risk, and I think that we need to break down in maybe two separate components. There are those things that you can control, and there are those things that you cannot control, right? And it's the things that you cannot control that you can kind of stop and look, okay,
right.
There's something that was unforeseen. But I think when you look at the majority of risks, most of them you can either control, mitigate, or somehow plan for. And I think that resilience comes down to that. Right. It comes down to thinking about what are the things that I can control and what are the things that I can put in place and think about before they happen, right? You can't stop bad things from happening. Bad things happen to good people. Bad things happen to bad people. And that's the same for companies, right? And so whether we're living in a geopolitically unstable world, whether we are hit with a cyber attack, whether we're hit with an earthquake, a flood, a strike, all of those things, there are ways to mitigate them. And I think it's those companies that think about those risks and actually put measures in place, the ones that survive and the ones that, continue to operate.
That's a great answer. If we ground this into reality for a second, not narratives, not politics, not ideology, just sort of physical, real world. What are the real physical risks that can shut down production faster than any market cycle could ever foresee?
That's a big question.
It's a loaded question.
It's a very loaded question.
Welcome to the Market Soliers podcast.
So let's start with the dirty phrase at least in my world, in mining. And the moment you hear unplanned shutdown, you get chills running through people's skin, right? It's when you have something that's happened, and how do you go about it? Now you're talking about physical risks, and I can interpret that any way possible. You can interpret physical risk as just an operational issue, equipment breakdown, bad things happen. You can interpret that as climate change. You can interpret that as perhaps a strike, something that's happening outside that's going to prevent you from operating. So the biggest, the biggest trend that we see in my sector, and if we take maybe some of the kind of the external factors and look at, operational resilience, right? The purpose of a mining company is to meet their targets, to deliver for their investors, and to meet what they say they're going to do, like most companies, right? And so the moment that you have an operational breakdown and your facility is unable to continue to produce, to continue to, push down copper or the bullion that should be coming out of it, then there's a problem. It's like, what are you going to do about it? And one of the biggest things that we see in mining is the risks are very big. Everything is big in mining. The trucks are big, conveyors are big, everything is grande, right? And therefore, the problems are very
Venti.
big. Exactly.
Shameless plug for Starbucks.
No Starbucks here.
No Starbucks.
And so the solutions sometimes can be very simple. And going back to the question on resilience, it's not about implementing the Cadillac of solutions. It's about thinking about what you can do and then thinking about what those options are. So from the physical component, I think that for me, that unplanned shutdown, whether it's coming from equipment breakdown, whether it's coming from the exposures that companies face on climate change, from wildfires affecting the electrical power that comes into the site, to changes in the environment where you now have issues with access to water that are making your operations maybe less efficient, or dealing with a community that the communities where you operate. So all of those things, to me, are pretty critical physical risks that we see a lot of our clients assume.
Yeah. For those, how do I put this? Some of those risks, they are 100% manageable on paper.
Yep.
They show up as models, as forecasts. They show up as insurance frameworks, risk transfer mechanisms, all the things. But, Raul, we know that reality is we don't care about models. It doesn't fix anything. It doesn't prepare for anything. Which climate exposure are already insurable in theory, but operationally unmanageable in reality?
Let me think about that for a second. If you're talking about climate change, I would say all of them.
Okay.
There's always an insurable component to anything,
Okay.
right? But insurance only plays this very, very small aspect of what you do, and you can model. That's the basis of an insurance company, right? An insurance company will model a risk, they'll price it, they'll underwrite it, you buy that, and there you go, right? But we know that that's the tip of the iceberg.
We know.
Yeah. And so we need to think about some of the things that can go wrong, right? Look at wildfires, for example. Last year was probably one of the most active wildfire seasons in North America, starting with the forest fires in California.
Yeah.
Following with a lot of forest fires in Manitoba, in British Columbia, in Quebec. And so I think that when we look at how that's affecting how companies think about climate risk and where they operate is something that needs to shift. If you're going back to the conversation on insurance, right? There's only a portion that is insurable. Companies still need to absorb the vast amounts of capital on retentions. They also need to think about what about workforce, right? If you as an operator are suffering a loss or an unplanned shutdown because of something that's happening in the environment, you can guarantee the people that are working for your company are also experiencing the same. 100%. And what is their priority going to be? Their families, their friends, their livelihood. Perfectly understood and perfectly acceptable. So it's all of those, that trickle down effect that happens when you consider risk. That go far beyond whatever is insurable, that I think, to your point on whether you model it or you don't, it's really somewhat unmanageable in many cases. Yeah.
Do you see from your perspective that more people are noticing, the spread of the wildfires, the more common they're becoming? Do you see from your perspective that they're factoring that in more to their insurance now?
Absolutely.
Really?
They're not only thinking about, insurance is really the last line of defense in this whole aspect, right? The most important component is how do you state resilience? What are the things that you can do to not have that issue to begin with? You cannot prevent a forest fire from happening. That is just reality. But you can prevent or mitigate how that's going to affect your operations, how that's going to affect your personnel, and how it's ultimately going to affect your bottom line as a company.
Fair enough. So at what point do you think this stops being about environmental and starts being about financial survival? It stops being a sustainability conversation and really starts shifting to a capital conversation.
It's all about adaptation, right?
Okay.
So we were talking about, 5-10 years ago, we were talking about climate change as an issue, as a risk. Now we're talking about climate adaptation. And so when we use the word resilience in any context, it's really how do we adapt to all these things that we cannot control. And we're seeing that across the board. The question on resilience, on how do we adapt to climate change, is a question that dominates boards. I sit and I talk to C-suite and boards all the time, and it's a question that comes on over and over again. It's like, what are we doing? What are we going to do in the next 20, 30, 40 years to be able to withstand, to be able to manage some of those issues?
So where is that line then? Where do you find that line is between, where it becomes from the sustainable conversation right into that capital conversation? Where is the line there?
I think it's the same.
You think?
I think it's the same. I think resilience has become an issue of capital access, right? It's no longer something that you think about, or at least many companies don't think about as a way to manage a risk or manage a component of an exposure. It's a way to survive, to stay alive, to adapt to what's coming, to, in a way, access capital. We're seeing a lot of M&A activity in the mining space right now.
100%.
And a question that comes over and over again, it's not just about, the resources. It's not just about the jurisdictional areas where these sites are operating. It's also about the risk quality. It's also about how are these mines operating? What are they doing to stay resilient, and whether or not it's a good match. And I see that quite often, actually.
So if we zoom out from climate itself for a moment and into systems that mining depends on, okay? Power, water, data, transport, all of governance, all of it is interconnected. And all of it is fragile in very different ways. When you look globally, what worries you most about it?
I think, interesting question. You said it, right? It's all interconnected. I think that, what worries me the most is when we're trying to look at this almost in a vacuum and say, okay, we're going to look at, power for this organization that's building a mine site in X location. But have we thought about whether or not we have access to labor? Have we thought about whether or not we have access to qualified labor?
Big one.
Exactly. And what are we going to do about it? So I think, to me, it's all interconnected. If we look at things in a vacuum and, in a systems type of way, I don't think that the result is going to be a good one. I think we need to look at this holistically. What are we trying to achieve, right? As an organization, what am I trying to achieve? What am I trying to do for my investors? What am I trying to do for the culture, for the people that work for this company? And so I think that when you frame it that way, the conversations sort of shift.
And so what would you tell your clients in this situation?
I would tell them that the conversation is about making sure that everything that we can control needs to be at least addressed. If I decide not to control it, that's fine, but it needs to be understood.
And some of those are really tough conversations because they keep going, nah, never mind.
Exactly.
Which actually brings me to the next topic that I want to talk to you about. And it's one that a lot of companies sit there and go, yeah, it's not a big deal. Don't worry about it. And that's cyber.
Yep.
And cyber is not something to take easily nowadays. And it feels very different because you can't see it. You can't feel it coming. So most companies still treat it like a technical issue instead of a core operational issue. So let's reframe it properly here. Cyber is now an operational risk. It is not an IT risk anymore. So where are companies structurally vulnerable, even if they think they're protected?
Very good point. And I think that before I kind of dive into the core of your question, one thing that is really interesting is cyber in the context of the mining sector.
Absolutely.
I don't think that if you asked somebody 15, 20 years ago and you said the word cyber in the context of mining, it would be something just completely foreign.
And that's the thing, is that a lot of that narrative is still around, it's never going to happen to us. We're just a mine. Don't worry about it. So, yeah, I mean, to that point, absolutely, things have definitely progressed. So keep going.
You go to any operations today, right? And you can have equipment, massive equipment, operating in the middle of the Atacama Desert that's being monitored from Switzerland. That's being transmitted or controlled from Santiago or from a different location.
No, it's too late.
Exactly. So that effect is very, very real. And it's something that I think the mining industry is rapidly adapting to. And there's something that's true about miners, and they can adapt. They're shifty.
Shifters.
Exactly.
Shift.
Say it 10 times. I think it's something that is quickly changing the conversation, and you're spot on. This is not an IT issue.
It's not an IT.
It's not a bad email that came through. Mm-mm. It's become a real issue. It costs real dollars. It costs unplanned shutdowns that sometimes are not as easily addressed. It can sometimes cause the valuation of a company to drop, and therefore, people on boards being personally affected. by these, right? Why are you not addressing some of these real issues? If I'm investing in company A, I'm trusting that there's true governance on this. So it's a more interconnected issue than just your IT getting a bad actor just hacking to your systems.
Yep. Do you remember getting those emails where it's like, I'm so and so from this one, and the prince has all this money. They need to.
The Prince of Nigeria, send me 10,000.
Yeah, he wants to send this to you in holdings. And do you remember those?
I remember those. And I'll tell you something. I think that in 5 or 10 years from now, we're going to remember these very sophisticated attacks that we're seeing today. Exactly. And we're going to see them as, how silly what was that, right?
Yeah.
And I think that we are changing at such a fast pace that it's hard to keep up with a lot of these changes. And so for an industry that's historically lagged a little bit of that sophistication, if you want to call it, is something that we'll need to we'll see as a whoops.
Yeah. So if that vulnerability is exposed, we all know that things don't fail in isolation.
Correct.
Systems cascade. Trust collapses, operations fail, they stall out, safety is completely compromised. And those are things that you touched on a little bit. So let's play the situation out. If a coordinated cyber event hit a mining company today, what would collapse first? Production, safety systems, data logistics, or trust?
And I have to pick one. The first one in order.
Which one would collapse first? For me, I will tell you this for free. Trust.
Trust once. So fair enough.
Yeah.
I think trust will break once something bad happens. And I think, to me, the very first thing that would break down first is safety.
Safety.
Okay. I think the number one thing that as a mining company is that safety is first, right? You go to any mine site and safety is top of mind for most reputable operators. And so the moment you break safety down, then operations break down. Then I can't remember what else you said.
Data, logistics, production, trust.
Operations goes with, production, the logistics and all of that stuff. And then trust. Now, I'm not saying that trust isn't the most important one, but it's probably not the first. And I think that the moment, if you had a coordinated cyber attack that affected safety, and then that got out as something that wasn't done properly because of X, Y, and Z,
right?
That breaking of the trust will be very difficult to rebuild.
Okay.
But the first thing that breaks down, to me, it's safety.
Safety for you. Now, I'm going to defend my trust.
All right.
With an analogy.
Bring it on.
Okay. Say you're in the living room and you want to change the channel on the TV and you are looking for the remote. And this happens a lot. And you look to whoever is sitting on the couch and you're like, where's the remote control? And they go, I don't know. I don't know. I didn't have it. I don't have it. What's the first thing that you do?
I think they're sitting on it.
Trust. Trust. Right there. That's my point. Is as soon as something like this breaks, you're going to go, stand up. Let me take a look. Right?
Fair enough.
So there's where I defend my theory that trust is because the minute something like this happens, before an action is put into place about safety, whatever, they're going to go, whose fault is this?
Exactly. Fair enough. Fair enough. To my point, somebody sat on the control, so the remote control experience, bad safety.
To your point, he's lying, she's lying, it's underneath them. Okay, so everyone says they're prepared. Boards say they're prepared. Leadership teams say they're prepared. There are plans in place. There's systems in place. There's frameworks in place. Yet, preparation on paper and preparedness in crisis are extremely different things.
Right.
So let me ask you this actually directly, okay? How prepared are boards actually for cyber and operational shutdown scenarios and not tabletop exercises? We're talking like real world.
Yeah.
How prepared are they?
I think it all comes down to culture, right?
Okay.
It all comes down to company culture and governance. The question is, how prepared are we? How prepared are companies? The answer is as many as there are many companies
Mm-hmm.
in this sector. I think that it really comes down to, does the company actually believe that these are real issues, and are we doing these things because we're asked to do them, or because we believe that we need to do them as an organization?
So not just a checkbox.
Exactly.
Okay.
And I think that that's the difference between the theory and the reality. And the unfortunate reality is that, most people that have experienced some sort of issue, whether it's cyber, whether it's an issue related to, climate change, or just, natural catastrophe, or anything else, those are the folks that are going to have those scars, that are going to lead that culture and understand that these are real things that actually happen. I was just, sitting with a client yesterday, and a very, very experienced gentleman that has led, building massive mining projects across the world. And it was very evident that he had gone through a number of construction issues, whether related to casualties, whether related to physical issues. And when you have a conversation with someone like that, you're speaking the same language. You're saying, this is what we need to do, and these are the things that we need to think about. So it's no different, I think, that from a C-suite or a board level.
Okay. Now, here comes a pretty big topic.
Ooh.
It's everywhere. Everyone talks about it. Geopolitics.
Ooh.
Yeah. This used to be about permits. This used to be about regulation, policy shifts, political cycles, all the things. Now, it's about control.
Yeah.
Control of minerals, control of supply chains, control of strategic resources. How does that shift the game of corporate strategy?
Yeah. I think that many of us, so I'm not sure when this will be published, but we also, a lot of the speeches at the World Economic Forum, right? And I think that one thing that was made clear is that it's not business as usual, right? Things have shifted. Things have shifted for countries, and therefore things have shifted for people, and therefore companies, right? So I think that we're living in an interesting time where geopolitics, which maybe a few years ago used to be something that you saw on the news, that
a little entertaining here,
a little fun word to say at a dinner party, and now they're affecting our daily lives, right? And so it's that shift, is that concept of resilience, of what we were talking about. I think that's shifting corporate strategy. One of the big things that everyone's talking about right now is the very mining sector, right?
Well, it's hot right now.
It's very hot. Everyone's talking about mining. Everyone wants to say critical minerals. Everyone wants to say rare earths, even people that have no idea what rare earths are or what they're used for. But that's what we hear on the news, right? And I think, in a way, among all these, I guess, shenanigans that are happening around the world, it's a positive thing. I think what it's doing, it's actually highlighting our dependence on minerals, our dependence on this sector. Sometimes we live in cities and we forget where everything comes from.
Of course, we're going to forget about mining. What's mining?
Yeah, what's indium, right? What's rhodium?
Sorry. What is that?
I can tell you all about it in a second. But so all of that, what it's doing, it's actually really putting the mining sector in a spotlight. How is it changing corporate strategy? Well, I'm based in North America. I'm based in Vancouver and New York. I deal with mostly North American-based companies.
Right.
Yes, they're operating internationally in South America, in Europe, and Africa, but they're primarily based in North America. And one thing that we're seeing is this concept of control of minerals, right? Of this acceleration in development in jurisdictions like Canada, in the US. I think, in practical terms, what it's doing is switching a lot of those strategies to maybe look closer to home for some of those companies and saying, maybe this is what we need to develop. Maybe our strategy to look at a different jurisdiction, or maybe something that might be a little bit more attractive, might not be as high priority as doing something, closer to home that's going to help us kind of navigate through this period.
Do you see a lot of difference between how mining is being thought as and active down in the States as opposed to Canada? Do you see a big difference there?
Yes. I think, Canada is such a big mining jurisdiction.
So
right?
rich.
It's so rich. We also have, historically, we have a lot of the expertise here, whether it's from, the technical level, from geologists, engineers, accountants, to those that understand finance, to capital markets. The TSX alone has something like 1,200 mining companies listed in it.
Wow.
And then you go across the border and the narrative is different. You talk to the average person in the US and the first thing that will pop in their mind is coal mining. They don't think about it. It's really interesting.
Welcome to the 90s, 2000s.
Exactly. And I think that's shifting. I'm in the US a lot and I see that changing, right? Like people are actually opening their eyes and there's this, mayhem of M&A activity that we're seeing in the last few months alone, is just putting a spotlight on it. And so I think that gap that we had in the two is shifting, and there's a bigger understanding. There's a lot of companies that are now listing in US stock exchanges that they didn't before. We've seen quite a few of them do that just to be able to access, that capital and those investors that are hopefully coming in because of some of these things. So it's an interesting dynamic.
Well, it sounds like there's more education that is needed around. You're looking at down in the States, Nevada, Arizona. These are huge jurisdictions for very, very rich resources there. Or do you speak to a lot of people in that region as well when they're still going coal mining?
Yeah, well, if you speak to somebody that's in that field, I think that the answer is a little bit different. But yeah, absolutely. Just all the development that's happening in Arizona, in Nevada, is in Idaho. Is quite impressive.
Yeah,
and how fast things are moving.
I had Jared Scarf on the podcast not that long ago, and he's in Africa. He's in West Africa. He's in Mali. He's in Cote d'Ivoire, and he even back then was telling me just a few weeks ago too about the M&A and how strong it is even in Africa right now. And you're going to start seeing a lot more of that coming out of the African region. But you're saying now it's even here across the board. So it's going to be a very interesting year to see how much of that really comes to the surface for sure.
Now, of course, especially at these commodity prices, right?
Yeah.
Whatever. I'm sure by the time this is out, it's going to be a very different number. But gold just, broke the $5,000 mark a couple of weeks back.
Right.
It had a bit of a crazy day yesterday. And same thing with silver.
Copper too,
yeah.
Right?
Yeah.
So connected to all of this, we're seeing everywhere, and it's this topic is no longer just occasional anymore. It's not an isolated thing. It's not temporary, and that's resource nationalism. It's becoming quite structural. How do companies adapt to that reality?
That's a tough one. That's a really tough one. I think when you speak about resource nationalism, you have to dig deeper. No pun intended.
Mining.
And understand exactly what some of those motivations are in whatever jurisdiction that you're talking about, right? Sometimes nationalism or sentiments towards mining are just something that's socially I guess integrated into certain societies and therefore results in issues. Sometimes resource nationalism comes from populist governments that are singling out certain minerals. Not a secret. A few years ago, the Mexican government, for example, started to have this rhetoric around lithium. But if you dig deeper, Mexico is not a very lithium-rich country, right? So there's a lot of talk, and then there's what actually happens. And so I think that as an organization, you have to understand, what what the difference between politics where you're operating and what the reality is.
Yeah.
And so I do think though that when we talk about what's happening across the border in the U.S. right now, is some of this shift in politics going to end up in some sort of shift, and things that were unthinkable before in terms of conversations in similar topics are now something that we're talking about. So
at dinner tables,
exactly,
around your water coolers, they're just more common now for sure.
Correct. So if I had a crystal ball, I wouldn't even be able to read what that would happen, because it's just so uncertain.
Listen to your crazy uncle at the family dinner table now, because he's on to something. I tell you. Now, let's talk markets.
Okay.
Because fragility is no longer a temporary disruption. It becomes the baseline condition now. Okay? So if fragility is permanent, models break. Assumptions break. Forecasting logistics break. So what happens to capital thinking? Like, what happens to valuation models when supply chain fragility becomes permanent instead of cyclical?
Interesting. One of my colleagues recently did a TED Talk in Kenya, and in our world, and I have a point with this, so just bear with me.
You got me.
In our world, when we talk about what we do, when we talk about insurance and risk management, it tends to sound quite boring. Her point on this sector, her name is Amy Barnes, was around the concept of insurance. And one of the things that she said, it's the very concept of insurance is the losses of the few. The losses of the few are paid by the many, right?
What a great quote.
It is.
Can you repeat it for us?
The losses of the few are paid by the many. If you think about insurance, you pay your car insurance, your home insurance. There's millions of people doing the same, and a few people are going to have a bad day.
Yeah.
Right. And that's what it's there for. When the few start to become the many, then the insurance concept breaks down.
Yes.
Right?
That's what happened with ICBC. Just saying.
And so, one of her points on this, which I think it's really interesting, and she was talking about this in the context of climate change and things that are no longer isolated issues. They become systematic, which I think is your point.
Yes.
Right? And so the moment you start breaking down, or these models start to break down, then those foundational nodes and components just kind of don't work anymore, right?
Yeah.
And then if you don't have insurance, you can't operate a business, you can't drive a car, you can't fly a plane, you can't do anything. It's something so silent and so subtle, but without which you can't operate. And I think your question on markets, your question on something becoming cyclical instead of isolated is the same. When it breaks down, then what do we do? Right? And I think,
Yeah. I have a friend of mine, he uses this a lot. Two sides of the same coin.
Exactly.
Right? Okay, so this brings me straight into capital then, because resilience is no longer, as we know, just an operational conversation. It's actually around financing, around trust. It's around capital allocation. So where does it show up first? Where does resilience directly translate into capital access today?
I think it's just being able. It shows up in valuation, for sure. I think that first and foremost, the concept of being able to adapt, the concept of being able to operate and standing out amongst the many, comes out first. Mm-hmm. And so, to me, access to capital comes down to valuation. You're worth more when you're more resilient, and I think that that's a concept that is starting to be well understood by many companies. Resilience is no longer a risk issue. Resilience is a board and a C-suite issue, because if it's not there, it doesn't exist.
It's got to start at the top.
Yeah,
that's a great point. So if that is all true, though, then the next question becomes a bit uncomfortable. Are investors actually seeing this? Are they pricing it in, or are they still chasing just the story?
I would hope that investors are actually seeing this. I think that in environments like today, the commodity prices that we're living in right now, and apologies for going back to mining. That's what I know.
No, that's great. That's great.
It's a little bit difficult to see, right? When there's abundance, there's mayhem, and sometimes bad decisions are made.
Right.
And so I would hope that some of the issues that are going on around us, some of the discussions on geopolitics, on cyber, on climate change are being managed from the context of investing, right?
Mm-hmm.
The mining is not an institutional investor type of risk that you will find your companies going after. I think more and more it's becoming a topic of conversation and become more attractive. And I think that it's that sort of the coin that is probably going to ask more questions around resilience, around operations and what companies are doing. And so I'm hopeful that
it's coming more and more to the surface. So that conversation, as you say, is definitely starting to become more common now on the investor side, because we are now in a world where information is so readily at hand to almost weaponize us to ask the questions that even a few years ago we didn't have access to. So we're living in a world of so much data saturation that sometimes we all just get a little bit lost, but sometimes through all of that chaos, we learn something that we can bring to the table and say, but what if?
Absolutely.
Let's bring people into this a little bit further, because none of this works without that workforce. So workforce today intersects with automation, AI, safety systems, skill scarcity, all at once. So where is that pressure point? What breaks first if the talent gap isn't solved?
Yeah, you asked me a question earlier, and your question was on physical and what worries me on kind of the physical side. If you expand that question and you ask me what worries me the most about this sector, I think it's people, and I think it's that talent gap.
Okay.
I think that in the current environment, we're seeing all of that gray hair, really very experienced talent start to phase away and retire, and we don't have enough young people entering this sector. I think that
it's because it's not TikTok.
Exactly. It's not sexy enough.
Oh, there's that word.
We can make it sexy. So I think that's, to me, that's a big topic.
Right.
How do we close that gap in those that are leaving and those that are coming in, and how do we transfer that knowledge, right?
So do you have to have those conversations with your clients?
Absolutely. Yeah.
And how does that conversation look?
It's difficult, right?
It's a hard one.
It's a difficult. This is, again, it's not a company A, it's not a company B issue. It's a systematic issue, right? Especially concentrated in those areas that are mining jurisdictions. Right. If just now there is over a dozen $1 billion plus projects being developed in the US right now.
Wild.
On the mining side. And then you start thinking about who is going to work on this, and forget about the operational side. Let's start with who's going to build this. Do we have enough people to build this? Do we have enough engineers to develop some of these plans? Do we have the talent that is going to result in the best possible outcome for a lot of these projects? And unfortunately, the reality is it's not there.
Scarce.
It's scarce, exactly.
Even those mines that were generational.
Yeah,
it's now at a generation that's like, I'm not sure.
Maybe I'll move somewhere else, and maybe I don't need to do this. Maybe.
Ah, those proud dad moments.
Think of Billy Elliot.
Oh no, not Billy Elliot. Let's flip the side of that. We're gonna talk about technology without architecture, and that in itself that creates its own risk. So speed without structure, that really creates a lot of exposure, and there is danger there. So what's the risk of over-automation without resilience architecture behind that?
Yeah, and that's a big one, right? And I think it's linked to the cyber topic, right? And how do you quickly adapt? The unfortunate reality of the mining sector is that you're looking at this in a finite amount of time. So a mine is going to have a mine life of 20, 30, 40 years, maybe longer. It keeps extending or shortening depending on where the market goes. So you have to think about this in a limited horizon. And if a mine was developed 15 years ago, 20 years ago with all technology, and now it's trying to adapt to something that may not be compatible, there's a lot of costs that's involved with it, right? There's a lot of costs that go in and implementing, 5G technology to run some of these autonomous trucks. And so there is a decision to be made in those two. And when you marry the two and there's no real proper integration, that's when those things break down. And so I think that happens in any sector, but I think specifically in mining, because you're dealing with relatively short life of a certain project, it creates some of that breakdown. And again, it goes back to resilience, right? It goes back to understanding what that exposure is, and what is the right thing to do for the company.
Right. Well, I'm going to bookend this, and we're going to imagine the system change tomorrow. If resilience was measured, audited, reported, and compared the same way financials are, if it became a standard, if it became visible, what avenues would most companies fail at first?
Wow. Is that the game that you were
asked? No.
That's not the game yet. I really like the notion of resilience being reported. What I don't like about the concept of reporting in that framework, and I'll answer your question in a minute, is the moment you're reporting, you're ticking boxes and you're starting to play games.
That's right.
And so, in my opinion, that's when that true culture, that true belief in this is what we need to do because it's right, not because we have to or because we have to report it, that's where it breaks down. And so I think the answer would be different for different companies. Okay. I don't think there's one answer fits all. I think the underlying concept of reporting it is what, in my mind, would cause maybe a little bit of that breakdown.
Okay. All right. Great answer.
Was that enough?
Yeah, that was great. Now, let's dial down the consultant hats. We're going to take those off because no episode of Markets and Leaders is ever a complete episode without a fun little game.
All right.
And the name of the game we're playing in this episode is called Mining Apocalypse Draft.
Okay. Now, I'm expecting some zombies or something in here.
There will be.
There will be zombies.
Our fabulous editor, Jason, is going to have some fun with this one. This isn't a strategy exercise. This is a gut check, okay? So imagine a total system meltdown scenario. Everything is failing at once. I'm going to give you 5 apocalyptic draft picks, one at a time. And you have to tell me the first instinct survival plan. Okay? So, 5 answers, no more than like 1 to 2 sentences per draft pick, okay?
Okay.
No explanations, really. No safe answers. No corporate polished pitch decks allowed.
Okay, and you want me to say that right after you say
I will say
option.
it, and then you say it.
Okay.
So, humor, greatly allowed.
Okay.
Seriously, loosely allowed. Okay, here we go. One system you would save first.
One system I would save first.
What's your survival plan of it?
In like the mining?
Always mining.
Always mining. Like
we're gonna
system as in like
you choose.
Like
we're in an apocalyptic failure right now.
System. The uniforms. They're hot.
I can't even go on from here. Okay. I mean, how do you top that one?
Hey, try me.
Okay. One role you would protect first.
One role, mine.
The mind. So
No, my role.
Oh, yeah.
Like,
Oh,
you said,
your
like
role.
my role. Yeah.
Okay, your role.
Yeah.
Okay, the risk manager. Yes.
Yes.
Of course. Duh. One technology you would shut down immediately.
Interesting. One technology I would shut down immediately.
Mine would be the blasting. I'm just saying, though.
No, that's the fun one. No, of course not. Have you ever seen a blast?
Yeah.
Yeah. So no,
Wow.
I wouldn't do that. I would say, have you ever eaten at a camp, at a mine
I don't
site?
eat, no.
You don't eat. Okay.
I just take a deep breath and then I'm full most of the time. Of course I eat. At a mine site, in a mine, yes. Almonte in Portugal.
Oh, okay.
So we were underground in the depths of the depths. And yes, we ate in the little nook there.
Was the food good?
I brought my own. So,
Oh, okay.
But at an actual mine, well, we were, Anyway, not probably the same as your experience.
Yeah, I'd probably say, I mean, I've been to loads and loads of mines.
Okay.
And I think the spectrum of food can go from, very good, where you have the grandmas making something in the kitchen, to those where you have, the
Ham and cheese
the
sandwich.
industrialized, exactly, that tastes like nothing. So I would say the system, it would be the food system that doesn't kind of, that I'm not,
Because
in
it's
love
not
with.
hot.
Correct.
One technology you would shut down. Oh, no. We just
That was.
One risk you ignore completely. To the wind.
To the wind.
It's got to go.
It's got. Okay. This is gonna sound really bad.
That's we.
Have you? I mean, yeah, maybe I shouldn't.
No, do it. This is what we want. We want the goods.
I'm an engineer by background, and I love seeing, these massive trucks just kind of move around.
Those things are.
I've always had these like fantasies of just kind of witnessing, like driving with a truck that just
Through anything.
recklessly in it, and that's probably will never let me.
No
in one.
tank driving for you.
Exactly. That's what I would.
You would. Okay.
Yeah.
You would ignore that.
I would
risk.
ignore the safety rules, and I just kind of drive, and I just
Boom.
yeah.
Gone. One metric you would track hourly.
Enjoyment. I think people. I think
Even in an apocalyptic break failure, you're
gotta
like,
find
there's
happiness.
joy in this too.
You gotta find happiness.
Well, I mean, my son used to be incredibly into Plants vs. Zombies. This was this video game, and it was all about apocalyptic everything. And there was quite a lot of joy in that. So I get it.
Yeah.
Right?
There you go.
Joy in everything. Okay, so here's the wild card round. You can only bring one thing into the Apocalypse Command Center. What is it and why?
A hard hat. It's a boring question. Boring answer. Sorry, not a question. Yeah, I think hard hat.
Why a hard hat?
Because they're hot.
I can't even. Okay, well, that's the game. I absolutely love the humor. This has been epic. I want to lead this conversation off with one more very deep thought question for you, okay? If resilience became the primary competitive advantage in mining, who wins and who disappears?
The ones that wins again are the ones that take resilience as the lifeblood of the organization and not as something that needs to be managed.
Okay.
The ones that don't are the ones that use it as a ticking boxing exercise. And I think in the next decade, those companies that see resilience as the life and blood of a company are the ones that are going to be still around.
So not the ones that are screaming the loudest, the ones that are prepared the most.
Correct.
Great answer. Well, thank you so much for this. This has been such a great conversation, so full of insights. I'm sure you'll be back. I'm sure. Because you know why? Here at Markets and Leaders, we are the best and we play the best games.
I love the game.
Love the game. Okay, perfect. So here's the truth. Resilience isn't a department. It isn't a budget line, and it isn't a report. It's a leadership mindset. It starts from the top. In a world defined by volatility, climate, cyber, geopolitics, infrastructure, all of it, the leaders who win won't be the ones reacting fastest. They'll be the ones who prepared earliest. Let this be your operating reality check. And this is exactly why Markets and Leaders exist, to bring you the conversations that actually shape markets, leadership, and capital flows. Now, here is the disclaimer. These are the opinions of our own, with possible vested interest in any or all of the companies we speak about. Always be sure to speak with a licensed financial advisor and know your own risk tolerances. This is not to be used as financial advice. For a copy of our complete disclaimer, head over to Apaton.com. I'm Lyndsay Malchuk with Apaton Media. This is the Market Leaders Podcast. Be sure to subscribe for more episodes to come, because in this decade, resilience isn't optional. It's priority. Don't forget to subscribe and stay in the know. We'll see you next time.